Hello, I am Patrick Cawley with Keystone Elder Law. This is Keynotes, a series of conversations about issues affecting the elderly, people with disabilities, and veterans of the armed forces. It eventually dawns on most people, either through their own family experience or through the experiences of friends, that long-term care is both likely in their lifetime and also very expensive. It is expensive not only for themselves in a financial sense, but it's also a burden on their families if long-term care falls entirely on them. So there are ways to prepare for long-term care near the end of life. There are a couple of options. You can save your own money and privately pay for the whole thing if your income is high enough. You can rely on some government benefits such as long-term care Medicaid or Veterans Administration benefits, if those apply. In that case, I highly recommend you talk to an elder law attorney to navigate the maze of federal regulations and preserve as much of your assets as you can so that you get up the appropriate level of care without going broke. But the final option is another very useful tool to prepare for long-term care. It's a gift you can give to your family to relieve the burden on them, but also to maintain your own independence and dignity and stay in your home as you age. That tool is long-term care insurance. There are many factors to consider in long-term care insurance, and so I've brought on somebody who deals with this much more often than I do. I welcome Jessica Bannister. Jessica, thank you so much for bringing your financial services expertise to the table today.
Thank you, Patrick, for having me. I'm really excited about being here.
Well, this is great. Can you, is there anything you'd want to add first as a matter of background to long-term care insurance? Because, you know, I know that from my experience as an elder law attorney that this is something that we deal with all the time. This is what we do. The reality is that 70% of people age 65 or older are going to need some form and some duration of long-term care. We know that if in a skilled nursing facility in central Pennsylvania, the cost is going to be about $11,000 in today's money a month. And of course, that's going to burn through a person's life savings pretty quickly if they're a middle-class family. So you have to do some sort of preparation. So I understand you also go over these issues with your clients in a financial services and planning setting.
Yeah, I do. And I appreciate that we're having this conversation. Thank you for mentioning that a great majority of us will have some sort of long-term care event where we'll need assistance other than what we can provide ourselves during that experience. And that 70%, that's the national story on average. For me, even in my family, to bring it down to an individual level, my grandmother was diagnosed with Alzheimer's and dementia. And she was a wanderer, and she was the matriarch of the family. And so as her cognitive abilities began and her neurological abilities began to decline, it took a toll on the entire family. And so having these conversations about how it can impact the family, not only financially, but emotionally and psychologically, I think needs to be a regular part of our conversations these days, because it costs money and it also costs energy. And so if families aren't aware and aren't prepared, it could end up being more of a taxing experience than it needs to be. And thankfully, we had measures in place. And if we didn't, my family easily could have spent $50,000 to $70,000 a year purely out of pocket to provide my grandmother with the care that she needed and deserved for having taken care of all of us for so long.
Right. Thank you so much for sharing that personal experience with this. And that's a story I hear, unfortunately, a few times every week, where families have reached the point where they realize it's no longer safe for grandma to be in the home because she's wandering or because she's a fall risk or for any number of reasons. It's just not safe. But at the same time, they feel guilty because this is somebody who always cared for them and they want to give it their best shot at caring for them, but they have jobs and they have families and they're just distraught. There's so many emotions that go into it. So I think at least relieving the financial stress, which is the fear of losing everything, at least takes some of the burden off of that. So you're right. That's very much a part of this reality of planning for long-term care.
Yes, I wholeheartedly agree. So thank you.
When you meet with somebody who's, whether they're explicitly contemplating long-term care as part of their planning or not, how do you broach that topic? Either bringing it up when they haven't, or how do you, when they do bring it up, how do you break it down for people to understand all of the complexities in a manageable way that helps them sort through the reality of their own circumstances and reach an informed conclusion for themselves?
That's a great question. So I would answer that depending on, and I would kind of present the topic depending on where a person is coming from. So oftentimes people want to meet with me when the event is happening or soon after the event is occurring. And my conversations, admittedly, with that camp of people is very different and sometimes a lot more direct and stern than I even naturally feel inclined to be, because now we're in critical mass mode. Now we're in survival mode, and it takes, we have to take on a different posture when that happens, as opposed to someone who's coming to me when they're younger. So someone who is having the event or about to have the event, or just recovered from some sort of medical condition or event that they had, my conversations are much more frank. I find out what they just went through medically and then what they're eligible for at that point. And I even tell them, even with them being preliminarily eligible, it doesn't mean that they'll get through the underwriting process with flying colors. Now, for people who aren't having an event but might have experienced one, either through grandma or grandpa or uncles or aunties, or parents who are showing the signs of the starting to decline, then we can have a little bit more time to discuss our options there. And I know we're going to get into this later on in the interview, but it is age contingent. It is definitely contingent upon income during the younger years. But typically, it's never too late to start having the conversation about long-term care after the age of 18. So I think, similar to your industry, it's never too late, because the younger and the healthier we are, the less it's going to cost us over time. So I'm a dollars and cents professional, and at the end of the day, we'll spend less the younger and the healthier we are, as opposed to us aging and perhaps being diagnosed with things as time goes on.
I am so on the same page with you for all of that. That's true of estate planning and long-term care planning in the legal setting. If just to take long-term care, if people came into us 5 to 10 years at least before they have that critical event where what we call crisis planning starts, they're on the way, they're at the hospital, and they know they're going to have to go into long-term care for at least rehab, if not a longer stay. That's a different kind of planning. But if they come in 5 to 10 years before it, there are things we can do with irrevocable trusts, and we can do with other legal planning that will just make it, first of all, we can preserve a lot more of their hard-earned savings when it comes time for that expensive care down the road. But, I think we can try to tell people that, and that's why we're recording a conversation like this, to put the word out there. And we'll keep fighting the good fight, but human nature is to put things off. So there will always be that crisis planning. But let's assume that people do come in, let's say in the, they plan ahead as they're supposed to do. And hopefully after watching this, everybody, makes an appointment with you and wants to plan ahead. How do you break it down? I've heard you say you have four sort of factors or 4 questions you go through.
There are 4 questions that I definitely start with to kind of bring the possibility of needing these funds home. Because I think prior to asking these questions, we think, oh, we have time, or we're healthy enough, or certain people will take care of us when that time comes. So I do like to start with 4 basic questions. The first question is, if by chance you're part of that 70% of Americans who might experience a long-term event and need that additional assistance, who would you want to care for you? And the answers vary depending on whether or not a person is married, whether or not their marriage is healthy, if they are married, whether or not they have children, whether or not they have family in the area. So the first question is certainly who. If you're a part of that 70% who needs that additional assistance, who would you like to care for you? Your nurse, a nurse, your spouse, your adult children, a sister or brother. And then we have to take their health and their age into consideration when we have that. The most common response when I ask, who do you want to care for you, is, well, of course, my children. And then my follow-up question to that is, well, do your children know? And some will say yes, some will say no. And that follow-up question comes with, do they have the money to do what you're expecting them to do? Because it will take money. Like you said, it takes time away from their families. It takes time sometimes away from their ability to work. And so we definitely flesh out that initial question as much as we possibly can. The second question that comes after that is where. So after we've established who, we can have 2 or 3 people who we're thinking about asking and bringing into our process if we do need that care. But the where, to be honest, aging at home costs it has a very different price tag than it does to aging in a skilled nursing facility or aging in a nursing home or getting that concierge care that we hear a lot of celebrities getting. So if that's the case, depending on where we want to age, definitely cost brings up. I'll speak specifically about Pennsylvania statistics now. In 2019, to age at home, which is the most cost effective for a lot of people, and that's not having 24-hour care. That's just having someone come in to help you do some daily tasks. $50,000 to $70,000 a year in 2019 for the state of Pennsylvania. And for a semi-private nursing home stay, so you may or may not know who your roommate is when you get started, but for a semi-private nursing home stay, it could easily cost between $118,000 and $119,000 a year, which brings us back to the number that you mentioned. Easily $10,000 to $11,000 a year. So where we want to age definitely comes into play. And there are things like adult daycare centers where we can just be there during the school day or during the work day to just socially interact with others. So we have a lot of options, but where also comes into play. So first,
and I think, and on that note, I think, all the surveys show that most, and this isn't surprising, most people would prefer to age in their homes, because their homes are tied up with, even though it's just stuff, often the stuff is the trigger for memories, and that's their identity, and that's where they feel comfortable. And of course, it's built up in people's minds that, if you go into a facility, that's like going to jail, and that's not always true. I've been in many of them locally, and some of them do an outstanding job. They have great committed staff, so that they get a bad rap, and especially during COVID, it's not a great, proposition for a lot of people in their minds, but people want to stay at home, but they should know exactly what you just said about the financial reality of doing that.
Yes, I love that you brought up COVID too. Some would say those are the areas where we're the most vulnerable and we're the most at risk of contracting the virus. And in my several years of doing this, I've actually been in very beautiful facilities, but I've also been in facilities where, unfortunately, I would not place one of my parents in one of these facilities because they're going to have a very different experience than what I think they deserve, and then an experience that even I would want to have. So there is a varied, there's a varied experience, I would say, for people who are sometimes aging within a facility versus aging at home. So I would absolutely agree with you. Generally speaking, the preference is to age at home. And in many cases, that does end up being the most cost-effective option, but we still need funds to do that. It takes more than just, I'm going to stay with my daughter or with my son and his wife and see how that goes.
It does have a nice surface appeal, but your job, you're saying, is to dig down into that idea and say, is that really realistic? So I think that's helpful.
And if it is realistic for you, and if that's truly what you want, how can we make this work and take all of the unknowns and the knowns into consideration? How can we prepare for the prepare for the worst and hope for the best in situations like these? So yeah, each of these 4 questions we flesh out for sure. So there's the who, there's the where. The third question, which is really where I come in, is how are we going to pay for it? So no matter where we age, it's going to require some additional money. I like this analogy. Not everyone likes it, but I think about just the natural human progression. When we're younger, we need a lot of care. When we're infants and toddlers, and we just need a lot of assistance and hand-holding. And then we get to that middle phase of life where we're independent, we're working on our own, we're pretty much independent and self-reliant. But then for some of us in those later years, we're moving at a slower pace. And so the how are we going to pay for it? Just like babies and children require some extra money in our budgets, when we're aging, it's very similar. So even if we're able to continue driving, we might not be able to lift as much as we could when we were in our 40s and 50s. Even if we're still able to essentially live alone, grocery shopping. Now, thankfully, there are a lot of grocery delivery services now, but for some people, the habit and the memories of just grocery shopping is hugely important to them. So they want to be able to continue to do that on their own, but they're not able to navigate the grocery store and the buzz and the people there the way that they could when they were younger. So yeah, I do, as much as I can, try to shed light on what day-to-day would look like how we're going to pay for it, how we're going to introduce care into our lives. And so we flesh that out also. That's a big question in this series. And the last question is, which asset are we going to use first? Most of us have, even if they're not as diversified as I would feel comfortable with them being, most of us have some diversity in our portfolio. So we have options when it comes to paying for these things. And when we do pay for our services, we want them to be as tax efficient as possible. Anything that's left over, we want to leave that for surviving loved ones in the most tax efficient manner also. So a lot of us don't like talking about taxes, but even that comes into play in this conversation, because depending on what asset we use, we might be creating a taxable experience for ourselves versus using zero tax dollars. So we flesh out each of those questions. Usually our first conversation is loving and also sobering. And then from there, we get to build the plan that we want to have in place so that when life does happen, we're not caught off guard by it financially.
You know, I think that that's such a good way to put it, that it's a sobering conversation, but I think it's one that people really appreciate having gone through because they didn't know they had a problem. And so the conversation that you just described, they walk away from that conversation with you thinking, I didn't know I had a problem, so she just delivered that value to me, but also she came with a solution, you know, so she's thinking about this systematically and there's a path forward. And I'd like to think that's the same thing that our clients realize when they start talking to us about Medicaid benefits and veterans benefits and ways to afford long-term care that way. You know, I like to say my colleagues in the legal profession who are criminal defense attorneys don't have to convince potential clients that they need a lawyer. You know, when the handcuffs go on, it's pretty clear. But they, you know, other people don't realize they have a problem. And that's why we have to do conversations like this to just educate people that it's a lot more complicated than you might think, but there are solutions, and there are solutions that can be tailored to your, you know, how are you going to pay for it? Who's going to do it? Where is it going to happen? For your circumstances, there can be a solution that you will be very happy with once you realize there's a problem to solve.
Certainly. I would certainly agree. Yes.
So, you know, you mentioned a little bit earlier that some of the factors as you go through these four questions, some of the factors are going to be, let's say, age, maybe wealth, maybe family history of family health history. So, you know, as far as age goes, I understand there's sort of a sweet spot for when people are going to be the best applicants for long-term care insurance. We've already covered that some people procrastinate on these things. So let's assume people come to you maybe older than you would like as far as the planning. What's the right age range in terms of having your application go through and get through the underwriting, and also that the premiums are affordable for them?
Well, I can do, in terms of customization in this arm of insurance, I can customize it beautifully. And the younger a person gets to me, the better. Like I said, I can help put some long-term care options in place for individuals as young as 18 years old. And in instances like that, to make sure we're budget conscious, it might be something that might not be pure long-term care, but a long-term care component folded into more of a traditional experience. So anyone over 18, from a budget standpoint, if we want something that's robust and we want to play out our long-term care and retirement experience as beautifully as possible, typically financially, late 30s, 40s, sometimes early 50s is the age sweet spot. And one factor that comes into play that I don't think that society really wants to admit at this time, but gender does come into play. On the life insurance side of things, men are typically more expensive to insure because statistically, we love our guys, but statistically, you all pass away sooner than us. I'm sorry, I don't know how else to say that. And so in the long-term care insurance world, women are typically more expensive to insure because women statistically are living longer, which means they'll need more money in the retirement and long-term care event than a guy would. So these are even factors to consider. So usually the guys are upset when we're putting the life insurance in place, and then the women are more upset when we're putting the long-term care in place. But we do discuss all of those factors, and we customize it not only according to budget, but according to health history, sometimes family health history, and other different factors when we're building those plans.
You know, it's funny you mentioned the impact of the gender of the applicant, because now of course online you spend any amount of time on Facebook or any other place online, and there's these memes that have developed showing men doing extraordinarily stupid things, and then of course the caption is why women live longer than men. And I'm sure you deliver the news a little more diplomatically than that, but it is a reality. I mean, for reasons that are a little more complicated, there are gender differences there. And so you mentioned family health history. So I suppose if somebody is thinking, well, both of my parents had dementia, or both of my parents had Parkinson's, that might be a motivating factor to start looking into long-term care insurance. What role does that play in the conversation that you have?
The role that it plays in my conversation is typically, it makes the conversation easier to have. So another question that I ask too is, what has been your experience, if at all, with a family member having a long-term care event and how it impacted the family? So sometimes there's no true negative family history, but they know they're going to live longer, and they know that their parents, it wasn't necessarily a long-term care event medically related. They just were moving, let's say, slower than they could when they were younger, and they couldn't lift as much. So that comes into play initially. It certainly comes into play when we talk about going through underwriting, because some of the questions that will be asked and will be considered do relate to family health history. But in most cases, it just gets the ball rolling with the conversation. And for most individuals, if they've not experienced it on their specific home front, they've either supported a friend or a tertiary family member going through it, and they know the impact that it can have on the family. So while that is an important component, it usually just helps us get the conversation started. And another follow-up question that I like to ask is, even if you weren't the person there when that person was having their long-term care event, what was your observation of how it impacted the family? So again, that's usually a really great starting point for us, because it doesn't necessarily dictate how the rest of the experience would go. For instance, in my family, Alzheimer's and dementia, it shows up on both sides. But with both of my parents, they're still insurable on this side of things, on the long-term care side of things, even with that being in our health history. So it's not necessarily a death sentence, but it's also having great family health history doesn't necessarily mean you're automatically insurable.
Good
So
point.
it still comes down to an individual level.
That's great. To sort of bring it back to the beginning of the conversation where we talked about the high likelihood of needing long-term care and having to find a way to pay for it, some people balk at paying for long-term care insurance, paying for the premiums on the notion that they may never need it, even though they have car insurance and the likelihood of having to file a claim is far lower than the need for the likelihood of needing long-term care. And they have homeowners insurance or renters insurance, and the likelihood of filing a claim is far lower than needing long-term care down the road. But so if people balk at that, I understand that's at least part of the reason why we now have these sort of bundled life insurance and long-term care insurance packages. Can you just talk about that briefly and explain how those work?
Yeah, certainly. So a lot of what you said is how I start the conversation there for the individuals who balk at the price. Oftentimes I bring up their gender. That's something that when you're first born, you're not in control. So I don't know, that was the card that we were dealt there. But also, in addition to the insurances that you mentioned, we also do the same thing on the health insurance front. I'm someone who goes to the doctor once a year for my annual physical. So all of the premiums that we're paying for my family, even on the health insurance side, I know that the cost of my physical does not amount to our annualized premiums. Now, once in a while, we use more than the services that are included in the plan, but we've been quote unquote wasting and not using a lot of the services that we pay into. So I just bring that home too. So yes, like term insurance also. Term insurance is something you're not going to get that money back. The only time you or your family is going to experience benefits is when something bad happens. That's the same with our auto insurance, which is required in Pennsylvania, not in every state, I realize. It's the same with a health insurance plan if we have that in place. But how that comes into play, we still just bring it home. In many cases, I have a sense of what their budget is or the things that they're currently incorporating as an expense in their world. and we make it work. Even with pricing, I have a lot of wiggle room with customization. And sometimes, depending on what a person's budget is and how much they can comfortably fit into their budget, we're having a different conversation, because long-term care might not be the best first step if someone has to be extremely budget conscious in the beginning. Now, if someone has more assets to work with, we have a return of premium feature. So I say, hey, you won't have made much on this money for it sitting in this type of vehicle for this time, but at least you won't not have lost anything, and the money wouldn't have gone to waste. And let's say you live to be 97 and you don't need any help at all. Whatever you invested into this type of long-term care insurance product, you get it back. No questions asked.
That's just great. What a wonderful point to make, that it can be customized to each person's resources and income and so forth, and that, you know, it's not a, I think people just see it as throwing money away, and they don't see the value, or even, I was not even aware that of the return of premium. So that's a great feature. So you could probably talk about every aspect of this conversation at great length, but I'm not going to take up any more of your time. I'm just so appreciative that you had this conversation with me. How can people get in touch with you directly if they wanted to ask follow-up questions and start planning for themselves?
Great question. So also, honestly, it depends on the person. Some people prefer calling. If they prefer calling me, you can let me know. I can share my phone number now, my work mobile number, so you can reach me at any time. If I'm awake, I will answer and respond. If not, I will wait until the next business time when I'm able to. So people can call me, email me. I have a website. I'm on LinkedIn. I'm on Facebook. I'm on a lot of different resources. So a quick Google search will get people to where I am. I just always specify Jessica has a Y and Bannister has 2 N's.
I will get the spelling right when I post this conversation, I promise. And a simple Google search will turn up how people can get in touch with you.
Absolutely, yes.
Well, Jessica, thank you so much. I think that this has been extraordinarily helpful. I think it will lead to people asking questions they're not asking and should be asking. And I just appreciate your time.
Thank you for having me. I appreciate your time too. And I hope you continue helping people kind of grow the last season of their life the way that you've been doing. Thank you.